I will try to talk about smarter, simpler, and stronger financial supervisory architecture in the European Union. I'm really curious to see how that can be translated into the graphical interface on my right. It's a topical issue, and in a way, it's a long-term issue. So what I want to focus on is really the supervisory architecture, which in the European context, of course, means primarily the division of labor between the member state level and the European level. And it has not escaped your collective observation that we had a bit of an inflation of unions in the recent years. We started with banking union. 2 years later, we had capital markets union. We had one which was not labeled a union, but actually was functionally one, which is what the European co-legislators have decided to do about anti-money laundering, reacting to events mostly in 2018, with a legislative proposal to create an anti-money laundering authority at the EU level in 21, adopted earlier this year. So AML union, if you want to call it that way. And of course, now the talk in Brussels, as you know, is about a savings and investment union, which everybody has their own definition, I guess. But the way the European Commission, I speak under Hugo's control, defines it, if I understand that correctly, is that it's kind of an encompassing concept for both the banking union, the capital markets union, and why not the insurance union one day. So insurance union is, of course, a kind of code name for what I will be expanding on here. It's not an official label as far as I'm aware of. It's also not necessarily the way to call it, but I think the question of supervisory integration in insurance supervision space comes to mind. It may not be the last to come because there are other aspects of financial supervision that I haven't even mentioned yet. And particularly, I'm thinking of protection of savers, of customers, a number of conduct of business issues that do not necessarily fit very well with banking union, capital markets union, or even insurance union. So maybe down the line, we'll have a financial customer protection union one day. So let me expand a little bit, and I know my time is short, so I will do this very succinctly, oversimplistically, on where we are in this journey, which I think can be fairly described as a transition from national supervision to European supervision. So if you remember, before 2012, there were always a lot of debate about European level supervision. As far as I know, the first committee at the European level of insurance supervisors was actually a committee of insurance supervisors back in the late 50s. It's not well documented, so I'm still trying to understand why it happened earlier in insurance than in banking or capital markets. And maybe I will find some archive one day. If you have tips, I take them. I'm interested in supervisory history. But then, we had a number of coordinating committees increasingly formalized in the three main areas of banking, capital markets, and insurance, but also in AML and other issues. All that remained relatively marginal until 2012. 2012 is a big breakthrough because 2012 is when the leaders of the Eurozone countries decided to start the banking union project, but actually to implement supervisory integration in prudential banking supervision. So if you think of banking union, I think you could think of it as an unfinished project. Everybody knows that we don't have a deposit insurance, that there are issues with sovereign exposures, and so on and so forth. But when you think of supervisory integration, what the ECB calls European banking supervision, or also known as a single supervisory mechanism, that's a complete framework. It's not unfinished business. It's basically 100%, at least as far as I'm concerned. And it also has been up and running for 10 years. So at this point, we can say with some confidence that it works at least as well as national banking supervision in that area of prudential banking supervision. And there have been interesting findings down the line. So before 2012, the proposition of supranational supervision, especially for an area as sensitive as banking, was considered somewhat utopian. I remember that era. The typical argument was, yeah, maybe it works in theory, but not in practice. Maybe it's desirable in principle, but in the real world, it won't happen. We have now a proof of concept, and a very interesting fact about this proof of concept is that the ECB has learned over the years, not in the first few years, the ECB has learned to accommodate diversity. So now, unlike in 2014-15, they know very well the different features of national markets, and they understand the difference between a Dutch mortgage and a Slovak mortgage. Then CMU. Not everybody has their own definition of capital markets union. Personally, I view it primarily as a supervision story, a story of supervisory integration. And indeed, in the spirit of smarter, simpler, stronger, especially the middle piece, you can view supervisory integration in capital market supervision as a giant simplification exercise. Because we already have a European levels at ESMA, it's a direct supervisor for a number of market participants. By the way, disclosure, I'm an independent non-executive board member of one of the trade repositories supervised by ESMA, but I'm not speaking in that capacity. It's super complicated. And tracing a boundary between either at the functional level or at the quantitative level or both to define EU territory versus national territory in capital markets is extraordinarily difficult. In European banking supervision, it was kind of easy that, this is about prudential. Prudential is correlated to size. So they introduced in the legislation, not in the initial proposal, but in the discussion in council, this threshold at 30 billion euros, and that has been very helpful. It has worked well. But you cannot have that in capital markets. So, Capital Markets Union, first decade, 2014 to 2024. As you know, not much has happened. The Commission has done some very valuable work. I give them credit for that, but it has not been transformative. And the question for the new term and for Commissioner Albuquerque, now confirmed, is will there be something real? We shall see. And by the way, for banking union, there's this Commerzbank story going on. We're in Frankfurt, so I have to mention it. I saw yesterday, coming back from a dinner, that the Commerzbank skyscraper was illuminated with a big heart. I thought this was addressed at Italy. But it's something that will, of course, be a test for banking union. So my conclusion will be on the insurance union. I think at this point, the agenda in Brussels is about savings and investment union. It's about making a reality of capital markets union and completing the banking union, probably in that order. If you think of the maturity, whether it's ready for show, I think supervisory integration in capital markets is much more mature in terms of discussion than the completion of the banking union. I could expand on why, but won't for lack of time. Insurance union is not at that level of maturity, so it requires more discussion. I believe it will come, because I believe this transition from national to European supervision is only a matter of time. We're in the middle of that transition. The most difficult step was to prove it could be endeavored. That was done in 2012. And I think that transition will continue. It will never be complete. There will always be a national component because we're in a kind of, pardon my French, federal framework. So there will always be some back and forth between the national and the European level, but I think we will continue directionally towards greater supervisory integration. So that's my conclusion. Insurance union understood that European supervision is probably the future. It probably is a somewhat distant future. It's well worth discussing. Thank you very much.
Thank you, Nicolas, for your impulse statement. Yes, and for taking us through the history of the unions in financial unions in Europe, and your thoughts about where the future might take us. We are not a young crowd. I'm not sure anyone was around in the 1950s, but we shall ask our grandparents, see what they say. Good. Okay, so our panel session here really is reflecting on what's been quite an intense period of introducing new and reviewing existing regulatory frameworks. The focus right now is on implementation. What needs to do to make sure regulation works well? And is there a common approach to supervision and robust oversight, while at the same time fostering innovation and the all-important market growth. This panel is very similar format to the other panel with two exceptions, one of which is we will be doing a Slido poll in a moment, so please get your devices ready. And also there will be Q&A at the end of this one, so we'll have a chance to ask questions of the panel. Let me introduce the panel. On my left is Ugo Bassi. Ugo is Director Director of DG FISMA in the European Commission. And he's Director of Banking, Insurance and Financial Crime, so lots to do. Ugo was recently appointed, but he has obviously many years of experience in the Commission. Before that, he was Director of Financial Markets for more than 10 years, and he's been involved in many of the key European initiatives, including Capital Markets Union, Sustainable Finance, CSRD, ESAP, lots of acronyms. But I will stop there. Ugo, welcome. Thank you. On his left, we have Alberto Corinti. Alberto is a member of the board of directors at EVAS, a role he's had for 12 years now. Before that, he has held senior roles in insurance. I learned this today. You also actually worked at Insurance Europe, or the predecessor organization for Insurance Europe as well as the predecessor of EIOPA, CEOPS as well. So there's few people more experienced in insurance regulation or in the insurance sector more generally than Alberto. Thank you for joining us. On his left is Aleksandra Mączyńska. Aleksandra is Managing Director of Better Finance. It's the European Federation of Investors and Financial Services Users. So Aleksandra is representing the citizens of the EU in her role. She leads Better Finance's research and advocacy activities, defending the interests of citizens as financial services users. Previously, you were at the Polish Consumer and Competition Watchdog before becoming Better Finance. Thank you for joining us. And another recently appointed guest to join us on the panel today, Thea let me off pronouncing her full name, so I'm just going to say Thea Utoft. Thank you. Thea, as Petra mentioned earlier on, is the new Director General of Insurance Europe. She has extensive experience in EU affairs, previously served as Senior Managing Director at FTI Consulting, and also has been a Financial Services Councillor for Denmark at the European Union. Okay, I think introduction is done. We need to move to the Slido vote. So if we can get that up on the screen. So the question here is, what do you think should be the most important focus of insurance supervision today? And we'll just give a moment for you to respond to that. I don't think the sample size is very big right now. Okay, it's settling a little bit. Certainly the top two seem to be this issue of maintaining market stability and promoting financial soundness of the industry. Very important. Another one here is faster and more effective action by supervisors in case of detrimental products and services. Well, certainly two of those are affected by these issues around perhaps a union or more integrated, a different way of supervising insurance across Europe. But we shall reflect on those thoughts and those votes as we discuss the questions today. So, round one of questions is about supervision today. And Ugo, if I can come to you first. Do you believe that the current supervisory system ensures citizens and businesses feel fully protected? Where do you see opportunities for improvement?
Thank you, Christopher. And first of all, thank you very much to EIOPA for the invitation and to Petra for the warm welcome. Very glad to be here in my new capacity. I'd also like to take this opportunity to refer to what you said before. It is true that our intention in this new mandate will be to focus on implementation rather than producing, so much legislation. This is the original intention. That's, I have to be honest, this is what we believe and we propose at every mandate, at the beginning of every mandate, but then things happen, crises occur, we come across politicians who want to do things and want to sign things and be remembered. Many things can happen, and therefore our original intention cannot be implemented the way we want. Also, it is true that there is a clear request for us to focus on enforcement and implementation, but at the same time, there is also a clear request to do things and to improve things. And if we want to improve things, even if we simply want to simplify, then we have to act with legislation. So in a way, we're going to try to do our best, but at the same time, do not expect really too much, or don't expect us to do nothing in the coming years. And we'll start with the things that we'll talk about the future later. But as for your question about supervision today, do you feel fully protected? Well, I think that we are in a good position overall. Nicolas explained very well the relationship between the national level and the European level. So supervision is primarily entrusted with the national authorities. The responsibility lies primarily with them. And of course, since a few years and gradually, EIOPA has started to intervene in the scene with very positive contribution. And I think that, looking at the way EIOPA has intervened and interacted with the national level in the last years, I think that things are getting better and better. The added value that EIOPA started to bring since 10 years, and it's increasing in the recent ones, is in front of everyone. Assessment, country visit, peer reviews, guidelines, all these contributions that EIOPA is bringing are clearly offering investors and consumers a better protection. And as I said, the interaction between the two layers is satisfactory to a certain extent. Fully satisfactory, you ask me whether we can be fully protected. Well, I think there is always room for improvement. Certainly, there is already an expected improvement from Solvency II, because in Solvency II we have already inserted a number of improvements for the role of EIOPA, many more cases of automatic exchange of information, many more cases for binding mediation, possibility to disclose the name of the company of the undertaking in some circumstances. So already there, Solvency II will become a reality and concretely applied in the coming months/years. Already there is a possibility for improving. Then for the future, I think that this is for the second round of questions, so I will stop here. Thank you.
Thank you, Ugo. Thank you. Thea, can I come to you next? What aspects of the current supervisory framework do you believe have been effective in ensuring stability and policyholder protection?
Thanks, Chris. And also from my side, thank you for the warm welcome. I look forward to talking to everybody. And thanks for putting me on a panel on my third week. This is definitely a baptism by fire, and by no means could I do this without the team at InsuranceERM, who has been downloading their brains to me to an extent that is impressive. So to go back to your question, I think one of the very important things to remember is that the current framework under Solvency II has proven very effective. I agree with Ugo on a lot of the things he said. Already before we had the Solvency II rules, we saw an industry that dealt very resiliently with the global financial crisis and with the EU solvency, the EU sovereign debt crisis. See, this is what happens when people download their brains to you. Built on that, we have the Solvency II framework now. We have a solid revision as well. We've got that supported by EIOPA's involvement, which has been very helpful in enhancing the robustness and the strengthening. The goals have always been to align with the already practiced risk management principles in the industry. It's been to harmonize the regulation and do that to achieve a high level of consumer protection. And I think one of the things that we see now is that this has been very successful. The system is much more harmonized. We have a single rule book. And we have, again, EIOPA playing that key role that Petra actually also touched on earlier in making sure that people know what to look for. So it's much easier to look at the system as a very strong and resilient one already. I think Nathan might be very jealous that it's actually much easier to sell across European nations than it is the States and the US. So also they're very strong, and that's very dependent also on the supervisory framework. We also feel that it's very important that we have that system of a combination of national supervision and EIOPA role, because you need that national knowledge. There's an intrinsic integration in the national regulatory frameworks with tax, with health, and all sorts of other things like pension, for instance. I know we're coming back to that. So in that sense, we are really happy with a lot of the things that already are existing. I won't comment on whether or not banks or insurers are the same. I think supervision needs to be looked at from the perspective of the industry. So I tend to personally disagree with the proof of concept that Nicolas was highlighting, but I've had the pleasure of working on the banking union for the last 10 years, so maybe I'm biased. So to sum it up, we don't see a need for a single supervisor at European level, because of all these reasons, and because we feel that it's so important to not mess with a well-functioning framework. Ugo mentioned it as well. There are some things already now in Solvency II that we will need to see the implementation of. Level 2 is going to be really important as well. So there's a lot of things that we can do to address things that are, it's work already in motion. So let's look at what's going to come in there before we start thinking about doing big bang things that might not have a cost-benefit analysis that's coming out to its advantage.
Thank you very much, Thea. And I hope that wasn't too scary for you. Thank you. Alberto, as a national regulator, you have a dual role. You supervise local insurers, but you also supervise insurance groups. You also are what they call a home and a host supervisor as well. So you supervise companies that are based outside Italy that are coming into selling in Italy. And I wanted to ask you about the particular challenges with that aspect of the supervisory role here, and particularly picking up on that question, which was quite popular in the Slido poll about the cross-border activities.
Yeah, thank you for this question. Actually, from the introduction of Petra and Siguro, we saw that supervisors have many challenges. But let me say, I feel the need to say that most of the challenges came also from very simple aspects, very traditional risks. That those are challenges that comes from an unsound application of principles. Related to technical provision, related to future profits, related to market conduct in general. All those aspects that do not work, that create challenges for supervisors, are more difficult to address whenever this activity is cross-border. And speaking about cross-border, we can have a distinction between internationally active groups and companies selling by free provision of services in other countries. With regard to the groups, I think the setting of the supervision works quite well, in the sense that the colleges allow good cooperation between supervisors. There is a clear allocation of responsibility. There is room for improvement in terms of convergence. And on that, EIOPA is working, and I think should continue to work hard to allow for more convergence, especially with regard to internal models in case of big groups. But the problem do not come from those situations. I would say the weakest links in the chain are the free provision of services. There are not many cases, but those few cases have the potential to impair, the trust of European policyholders and somehow do not allow the development of the single market. And in this case, the setting doesn't work well, not always well. I'm not saying there are many cases, but those few cases could be important. Because the home supervisor sometimes cannot really supervise properly the activity made by their companies in another country, because they don't know the specificity of those countries, they don't know the challenges of those countries, they don't know the legal framework of those countries, or maybe they don't even have the resources to make these oversights, or simply they have other priorities in their own countries. And on the other side, the host supervisor doesn't have a structure supervision of those companies, cannot have a structured supervision of those companies because, for example, for aspects related to governance, it is not responsible for that. So a strange situation is created where the enforcement activity is weakened in this type of situation. So in this type of situation, we should find a way to improve the possibility of supervisor to detect risk as early as possible, not so late, and especially to intervene to solve those issues. And obviously, these situations are made worse, even worse, whenever there is not a convergent intensity of supervision in all jurisdictions, and whenever there are different legal frameworks that can impair the activity of the supervisor. So if we want to have a good single market, we should focus those type of cases.
Alberto, thank you very much. Aleksandra, I've left you to last, but in some ways you've got the most important job, is representing citizens of Europe. What's your view on how cross-border insurance business is being facilitated and supervised, particularly as we have more and more digital products out there that are easy to sell across borders?
Yes, thank you very much for inviting representative of retail investors, insured people, pension savers, also to this panel. It's a very important topic, and in fact, if we want to have insurance and pensions for the future, and if we really want to have the European insurance and pension business being competitive, definitely it should look also at what is important for pension savers and for insured people. And before I just go to the digital, from our perspective, very important issues for these sectors to be competitive and really future-proofed would be to, first of all, and this is also what Petra very clearly and rightly mentioned in her opening remarks, value for money, but also improving pension adequacy, also addressing underperformance of different finance products and ensuring that consumers have really access to performing and good products. When it comes to digital insurance products and transactions, of course, they offer many opportunities for consumers. They offer some efficiencies. They offer faster, for example, faster claims processing or cost efficiency or easier access to products. But at the same time, there are also many challenges. And we see that also when we discuss with our member organizations. Better Finance is a federation, and we have member organizations in most of the European member states. And we see also that consumers really need assurance that in digital transactions and especially in cross-border business operations, their data is protected, and that their both personal and financial data is protected. So there are also risks, and there are different risks, and then they change when we move to online environment, but still are quite important. And as fact, as reported by Insurance Europe, cyber incidents and fraudulent activities in digital insurance transactions remain a very important concern. And this requires also stronger cybersecurity protocols, and consumer education is important as well. And in this context, we also, from Better Finance perspective, think we should prioritize supervision. And we would definitely not mind, and we can imagine more European supervision in this context. We also know from our member organizations that policyholders often perceive cross-border products as complex, and in some cases at least unreliable because of different and insufficient safeguards. And we should also remember that insurance products are one of the most psychologically influenced finance products. So it really requires a certain mindset and financial and life situation to opt for buying insurance products. And quite often, very objective reasons are not the main factor when buying insurance products. So for us, a very important issue when it comes to supervision is the supervision on different algorithms, including in sales processes, but also comparisons and the ability for consumers to be able to compare products and to have access to independent tools that enable them to compare products. There was also an interesting study published this October that reveals a quite important gap between the expectations of consumers and insurance policyholders and the insurance industry capabilities when it comes to online transactions. And in fact, the study surveyed over, I think, 3,000 insurance customers in the UK, Spain, and France. And it really highlighted a growing disparity and gap between traditional insurance and insurtech companies in approach to online transactions. And apparently, the research also suggests that there are some, you could maybe say, easy fixes and some easier solutions to really fix the problems, and it would not necessitate a very important or a complex overhaul of the system. The study really highlighted that the ease of payment is one of the three top decision factors, especially for the younger generations, when buying an insurance. And from Better Finance perspective, it's a concerning one because it comes more important than claims processing. So from our perspective, also here, consumer education, a quite important issue. And the research also showed that 92% of the customers really want to use credit cards, debit cards, and are not entirely satisfied with the over-reliance of insurance industry on bank direct debits, and 1 in 5 have experienced some payment issues when buying insurance. And maybe just to finish, 35% of those that were surveyed indicated that the ease to buy insurance is actually influencing quite a lot whether they will buy the insurance at all, and outweighed the concerns over fraud, again, quite concerning, and also was more important than concerns on security of information and data. Fortunately, from a perspective of consumer protection associations, consumers still look a lot on value for money, and this came as 49% of them is really considering value for money when they are looking at the insurance product, and therefore it is quite important also to take it into consideration for all the supervisors, both the national and the one on the EU level, and we are happy to see that the work on the value for money is still being continued.
Thank you, Aleksandra. Yes, we have all become a bit used to one-touch buy now systems on our computers, on our phones to be able to buy insurance. So it's really interesting you share those thoughts with us. Thank you. Speaking of devices and phones, can you get them out again? Because we have another Slido question. So, what changes do you think are needed in insurance supervision to better protect policyholders in the digital and cross-border markets? I'll just give you a moment to respond to that one. Okay, we have probably one clear leader now, which is smarter regulation. So not new regulation, Ugo, just smarter regulation. Is that okay?
Doesn't exist. If you want it smarter, you have to produce new regulation to make the old one smarter. So.
Good. Okay. I promised we would take a look into the future. And I was. The question really here is around what changes, improvements, or adjustments you might make in terms of supervision. Thea, you've already said you're not in favour of any particular change in regulations. You think the framework is broadly good, but what would you think about in terms of supervision?
So I think, again, EIOPA plays a very key role here for us because they are crucial in identifying the emergent risks. So that's something we definitely need to keep. So anything you make smarter in that consistency, fair, but that's really important. I think actually the challenge and the improvement lies a little bit somewhere else. And I'm happy to see that people want smarter regulation because our challenge, the one we've identified, is actually very much linked to that. It's the complexity and tendency of overregulation that we do see in European legislation. So like with any other problem, the first thing is to recognize that you have a problem. And I think if you look at the Draghi report, the letter report, the things we've seen from von der Leyen, the mission letters, even the hearings across the board, we see a very high focus on, we can call it smarter regulation, or we can call it competitiveness or a reduction of burdens, right? So I think that is something that's really, really high up on the list. I know it's not easy to address this. I know rolling back burdens, I've had the pleasure of sitting at that table and trying to do the exact same thing. It does require a significant political will. It does require a significant will with the supervisors. So I think anything we can do as an industry to help instill that will in whoever who can do that, I think is really important. I think it also requires action across the board. I'm not going to put the ball squarely in Ugo's field, but it's also a matter of seeing what member states have come out with, the statements that they've made. They need to put action behind that. Supervisors at national level, MEPs as well. Everybody needs to contribute to this effort. But I do think that it's incredibly important. And I think one of the things we find that's really helpful is that we see that EIOPA now has a competitiveness mandate. We've called for that as an industry. We see that it's already existing in global level. We feel that it's something that can help that you avoid the unintended consequences, because you do take another look when you have different perspectives to consider, and of course the whole cost-benefit analysis in that sense is extremely important. It also allows to put some pressure at national level. I think if we could apply the same principle across the board at national level, that would be really, really helpful. We might even avoid a little bit of gold plating that we see happening here and there. And I think if you want a new idea to consider, Ugo, maybe we can put a gold plating watch for EIOPA when they're looking at enforcement and implementation of at national level of European legislation, so that you look at both sides of the coin. I think that would be really smart to integrate into the legislation as we go forward. And I think there's a lot of improvement already in the Solvency II framework. So again, I'm hopeful for the future. Maybe I'm naive, maybe I'm too new. But one of the things that is an improvement is, for instance, the enhanced cooperation between the supervisors. But we'll keep thinking about new ideas. But I think burden reduction, avoiding gold plating, making sure that every new rule or every existing rule is assessed from that perspective is extremely important going forward.
Thank you, Thea. Thank you. Alberto, thinking about the future, you've spoken already a lot about the issues you see with cross-border. Is there anything else you want to expand on that, firstly? And secondly, is there anything else that you would want to change about supervision in the future?
Yeah. First of all, let me say I'm not very in line with the result of the pool, because actually, I don't think we need, another regulation or even a smarter regulation, because regulation is quite good, I think, and is already there. The problem is the implementation and the enforcement of the regulation sometimes, and as I said, this is particularly difficult in cross-border activity and the free provision of services. I think we should focus on three aspects. The first one, which is obvious, is that the activity of EIOPA to enhance oversight and enhance the convergence of supervisory practices, bringing all the supervisory authorities at the same level of intensity of supervision, should be enhanced. So this is something that is key, because we still see, and Petra knows very well, because we have some reports, some survey, that on basic aspects of prudential supervision, we are not at the same level, like treatment of future profits or technical provisions and so on. And above all, on market conduct. Market conduct is new, is more difficult to apply for supervisors. So we have a lot of work to do to enhance convergence on that. This is the first point. The second point is that in cross-border activity, as I said, it's very difficult for host supervisor to intervene. There is a hook in the regulation, which is this famous Article 155, that would allow some kind of initiative by the host supervisor whenever there is no action from the home supervisor. But we have seen that it's very difficult to apply this article. It exposes too much the host supervisor to legal risk, and it has also different interpretations by the different authorities and by the different judges around Europe. So maybe a clarification of when the host supervisor can intervene sufficiently safely could be helpful. But this is something that maybe is not the optimal solution. And this brings me to the third point. The third point is that we have a lot of discussion in EIOPA, endless dispute, without the possibility to take a decision and intervene. We need a system that somehow gives a sovereign national authority, EIOPA, a power to intervene when necessary. I'm not saying that because I'm speaking at the EIOPA conference, but we need more power for EIOPA to solve dispute and to take actions. And the Solvency II review is going into this direction, but there are still some aspects that have not been allowed, like, for example, possibility for EIOPA to launch on-site inspection when necessary without the consensus of the other authorities, or even draw the conclusion from those on-site inspection and intervene directly whenever the competent authorities do not do that. So those are key aspects that could really help addressing those problems. And what is concerning is that we have seen that in the negotiation of the retirement investment strategy, we are going backward on this in this regard, because on market conduct area, which actually is the most important area in the cross-border activity, the powers of EIOPA have been reduced. And this is something that, in my opinion, is not going in the right direction.
Thank you, Alberto. Ugo, I will come to you in a minute, but first of all, if I can just come to Aleksandra and just really ask you to build a little bit on what you said earlier on about making supervision work better for consumers and protect consumers better. Can you elaborate on what your vision might be for that in Europe?
Yes, thank you. I would pick up also what Alberto said, and in fact, from consumer perspective, and especially when you take into account the fact that cross-border products, cross-border activities of insurance providers do seem attractive for policyholders, and they do find attractive the potential for lower premiums, for wider products offerings, and enhanced competition. They are attracted, and therefore, since not everything is working perfectly fine on the national level, from better finance perspective, we can imagine more powers and more EU supervision, and as Alberto already mentioned, especially in certain circumstances, for example, more powers given to EIOPA. And we also think it would be quite good to look and consider, and worth considering, more EU supervision in terms of, for example, insurance sector. Also, as we move forward from the CMU, and we discuss more and often right now, Savings and Investment Union, because when we have already market when different operators can operate cross-border, not having an efficient and effective systems and solutions for consumer protection is definitely not desirable. And to have policyholders, insured people, and pension savers not feeling adequately protected is a very dangerous consideration for the whole market. And we know already that insurance guarantee schemes are not harmonized, they are not working very well. And from consumer perspective, not being equally protected just because you happen to live in a country where you have a weaker supervisor, or in fact insurance guarantee scheme is not as effective or good for you as in other countries, is definitely something we should work on. And we have also seen that there are maybe not, for now at least, many cases when the policyholder losses are reported, but on the basis of data that is already available, we can just expect that these cases and the number of cases can raise. And in fact, looking a bit more into harmonization in terms of IGS is quite important thing. There was mentioned already cooperation and supervisory culture. I know that EIOPA, I'm quite aware that EIOPA is doing quite a lot and is trying to really encourage this. We also hear from our member organizations that they find it extremely important for national supervisors to learn from one another and cooperate. Again, very important, but we also know from some reports from EIOPA that there is not yet a unified supervisory culture. And for example, when some national supervisors, when they allow for registration of some insurance intermediaries, really look even for something like consumer-centric system available. Others really look just for criminal records, whether there is nothing that would concern them. So I would say that from the perspective from consumer protection and more active consumer participation in the insurance sector, but also pensions, it would be really worth considering to think about more powers for EIOPA. And we could start with those that already were mentioned by Alberto earlier.
Thank you, Aleksandra. Ugo, lots of things for you to respond to here. Let me give you the floor.
Yeah, thank you very much. So much input that I don't know where to start. But I'm trying to put some order in my. First of all, talking about the future, I need, of course, to make a disclaimer. Of course, I mean, nothing of what I'm going to say has been covered or endorsed by my new political masters, who are not there yet, by the way. So this have to be considered as personal views, quite informed, but personal views at the moment. First of all, a comment, which and this input comes from the discussion, comes from the Slido replies. First, one comment on the first Slido. Competitiveness. Of course, certainly, Thea mentioned it, we are certainly going to look at this new mandate through the lens of competitiveness. However, competitiveness, and again, in my personal view, does not mean and cannot mean deregulation for the sake of it, because a system cannot be considered to be competitive if it is not stable and if it is not safe. So financial stability will have to remain at the heart of our action. It's in the name of my DG, by the way, and therefore I have to be loyal to that, and the balance between the two objectives, of course, will have to be found, but it's not that we are going to deregulate for the purpose, for the sake of the competitiveness, which will be very important. Complexity of the legislation, Thea mentioned that as well. It is, I mean, I am the first one to recognize that we have a very complex set of rules, a very complex framework, especially in some areas, and I think that insurance is not even the worst. But talk with your banking colleagues. I mean, they are probably having a hard time and a harder time than insurers. But still, the complexity is a little bit inherent in the system. We have a very complex governance in Europe, and you have different dynamics, political dynamics, national dynamics. The council, the parliament, the commission. It's a very strange animal. And the outcome is unfortunately often not fully satisfactory in terms of clear-cut, simple, streamlined rules. I mean, the Commission proposes, and when the proposal comes out, is accompanied by a cost-benefit analysis, which is called impact assessment. It takes normally like 1 year to prepare it. And then, of course, when it goes in the arena of the negotiation with the Parliament and the Council, we have compromises which are struck overnight at 3-4 o'clock in the morning on figures which are not impact assessed at all. If you consider also that every stakeholder manages, either through the Council or through the Parliament, to put in the legislation what is important for their group, then of course you see that at the end we have beautiful Christmas trees, and that's unfortunately the end result. Coming now to the saving and investment union, it is true we are heading towards this new concept, and as Nicolas was saying, it's meant to encompass certainly capital markets union, certainly banking union, and certainly insurance and pensions. Are we talking about insurance union? Not yet. Honestly, but you never know. It could come in the future if labels are important. Certainly, Thea is right. There is a lot also for the member states to do in this new, let's say, configuration. And the Commission is ready to work on everything, but at the same time is work on everything which is likely to produce results. Because if we have to continue to fight against windmills, it's going to be a little bit frustrating. So we are that's why we feel and we see that all the contributions that we've seen out there, like not only the Letta, Draghi, Noyer report, but also the statements from the Eurogroup and from the Council, the European Council, are very encouraging, because for the first time they encourage the Commission to work in areas which were considered to be taboo until a certain period of time. Taxation, for example, is still mentioned, is still there. We don't know whether we will manage, but we are encouraged to work about that. And I come to the 2 points which are more linked to the community I'm here with this morning. EGS, of course, EGS is something that we I personally think we should look at. We've discussed this bilaterally with Petra a couple of times already, and I am ready, and I perfectly understand that the absence of an harmonized IGS makes it less attractive, probably, for a retail investor to go towards an insurance product rather than the banking one, which is protected, and supervision. So we go back at the heart of our panel. As I said, there is a lot already in Solvency II. Is that enough? I suspect that it is not totally enough in order, for example, to address the issues that have been mentioned both by Petra and by Alberto, and which are issues we are fully aware of. We are going to give a try what exists in Solvency II, but we are ready to look at that also, further, in the sense that if more is needed, we have no limits whatsoever in terms of what can be conceived and what further powers can be entrusted to EIOPA. Doesn't mean that we are going towards a single supervisor, but envisaging single supervision, European supervision on specific areas where this is needed, it's something that I am totally ready to look at. Thank you very much.
Ugo, thank you very much. I'm sure the audience appreciated your personal views on these topics, and thank you for sharing those. Good. I have a problem. Well, I have a quandary. Coffee or Q&A? Coffee.
It's in coffee.
Yeah. Better still, combine the two. Okay. Just a quick round of applause for our panel, and then coffee, and back here at 12:15, please.